So one of the biggest questions that I've been getting asked lately, after where's the next stimulus check coming from? Where's the next stimulus package coming from? Where's my free money? And of course, where's the next hot stock that I should invest in is where should I invest and how should I invest given the upcoming election? So in this video, I'm going to talk about some perspective and what you should look for when we're looking at our investments and the upcoming election. But before we do, if this is your first time at our channel or you haven't subscribed, click on the subscribe button at the bottom. My name is Travis Sickle, certified financial planner, helping you reach your financial goals. So whether you're a Democrat or a Republican, or whether you believe that Trump is going to drive the market or Biden, it really, at the end of the day, doesn't matter what position you're coming from, because I want to show you some information, some data, some numbers, some charts, just so you can better understand of historically what drives the stock market as it relates to the election. Now, I'm not talking about all the other political stuff that's going on. It's just your investments. And there is more at stake than just the presidential election. The entire House of Representatives gets elected again. We vote on it again this coming election, and a handful of senators are up for re-election, or we might see some new senators. Now, this is important, and I'm going to show you exactly why it's so important. But first, let's talk about what's up for re-election as far as the Senate goes. Now, if you're unfamiliar with how the Senate works, there are 100 senators. And currently there are 53 Republican senators and 45 Democratic senators and 2 independents that sit with the Democratic caucus. So let me show you exactly what this looks like and what's up for re-election. So right now we have 35 seats that are up for re-election. Now, of those 35 seats, we have 12 that are Democratic, and then we have 23 that are Republican. Now, as it stands right now, of those 100 seats that I talked about, 53 of them are Republican right now. And then we have 45 that are Democrats and 2 that are independents. So really, if we add these two up, it's 47 versus 53. Now, what you're going to see is that if the Senate can flip 3 and Biden gets elected, that means Kamala Harris is then the vice president, and she would be the tiebreaker. So whenever there is a tie in the Senate, the tiebreaker goes to the vice president. Now, if Trump gets reelected, then they would need to flip 4 seats in order for the Democrats to control the House, because in that case, the tiebreaker would be Vice President Pence. So if the Democrats can keep the 12 seats and flip 3 to 4 of the Republican senators, then they control the Senate. Now, here is a map of the United States, and you can see that the red is for the Republicans, the blue is for Democrats, the purple is for the states that are split, and those top 2 funny looking ones are the 2 independents up in Vermont and Maine. So if you're a Democrat, you might be thinking, well, I hope we can flip those seats and Biden gets elected. And if you're a Republican, you're probably thinking, I hope we can hang on to these seats and Trump gets reelected. But in either case, I'm not here to make a political prediction. What I am here to show you is the numbers behind what potentially could drive the market moving forward. And the reason I wanted to show you what the Senate looks like and potentially what could be affected moving forward is because here is how important Congress as a whole has on the stock market. So this graph or this chart, whatever you want to call it, I've shown this a few times already over the last several weeks. And it's just so important because it is not what you would think as far as the next election and the stock market. You would assume that either a Republican or a Democrat would have a much greater impact on the stock market. But from this information, what we're seeing here, in both instances, when we have some opposition, the market performs better. So let's dig into these numbers here. So over here on the Democratic president side, historically, when we're looking at getting a Democratic president and a Democratic Congress, so this would be flipping those Senate seats, then it would get an average of 14.3% rate of return in the stock market. This is the S&P 500. If it is split in Congress, we're getting 16% and 18.5% if the Republicans control Congress. And on the flip side, if Trump gets reelected, we could see here that our best bet is to have a split Congress at 17.6%. But historically speaking, this is what the data is showing us, which is really interesting considering the current market conditions. The market has performed relatively well over the last several months. And what do you know? We don't have the next stimulus package, and there is a ton of arguments over what should be included or not included in the next stimulus package. But yet the market continues to go up. And the market is rising despite the fact that the pandemic is still here in our country. And if we look at this map, some states have reopened, some states are reopening, some states have paused. The ones in yellow are paused, and the orange are reversing. Now, I'm not certain on this map exactly what constitutes a state reopening, reversing, or pausing, but this is showing the state of our country right now. So you can draw your own conclusions on this, where we're at, but the stock market continues to go up. And I want to make this really clear. I'm not telling you that you should be in the market or out of the market. I'm not telling you either way. I'm only showing you some historical information as it relates to an election so you can make a more informed decision. And when it comes to investing, there's a lot of anxiety and emphasis on the negatives when the market goes down, and we're always worried about when the market's going to go down. So here is a slide of bull and bear markets. And without even zooming in on any one of these dates, all of the blue are the bull markets and all of the yellow or gold is the bear markets. So that's when the market goes down. And you can see on the very edge, that small little part, that small little sliver that is down right here, where it went down 33.9%, that is what we experienced earlier this year. And if we look at this chart right here with the S&P 500, we can see how severely it went down earlier in the year. And this is kind of how we feel, where it goes down sharply. But if we zoom out to even the 10-year, we could see that it goes up over time. And look at that. Look at that dip right here. And then if we go out even further for 20 years, it just starts to shrink and slowly dissipate. And that's what we experience. Another view that we could take a look at, all of the rates of return each and every single year for the S&P 500 since 1926 all the way up until 2019. Now, the black is all the positive years, and the red are all the negative years. And what this chart shows us is the rate of return over long periods of time. So we don't have to sit there and do the math for each and every single year to figure out what that rate of return is. We can just look at the chart and we can figure out what the S&P 500 did. So let me zoom in a little bit here and I'll show you how this works. So if we scroll down here, we could see that 1926 to 2019 was an annual rate of return of 10.2%. And you're probably thinking, okay, well, that's a very, very long period of time. But even if we zoom in and go to more recent time frames, we could see what those rates of return look like. So if we look at 2019 and we go all the way back to 2010, that's a 13.6 annualized rate of return. And if we go to 2011, 13.4, 14.9, and you go straight down the line. Now, any of these numbers are for 2019. So these are over much shorter time frames. But as you get further and further out, that rate of return averages out to roughly 10%. And here's why it's so important to understand this, because if you're trying to time the market, trying to figure out who's going to win the election and how that is going to affect the stock market, let's take a look at this chart right here. So this chart is showing us if we missed the best days in the stock market since 1979. So we're investing $10,000. If we had invested our $10,000 straight through August of this year, since 1979, then we would have $952,000. If we missed the 5 best days in the stock market, we would have only made $590,000 versus our $952,000. If we missed the top 10 days, that would bring it down to $425,000. miss the top 30, that's 154, and 68,000 if we miss the top 50. So all this information about the election and the stock market, and more importantly, your investments in reaching your financial goals, tells us that staying the course, following your financial plan, and staying invested when it makes sense for your financial plan and not timing the market, you'll do better than if you try and time the market and you try and figure out how your investments are really going to perform depending on who becomes president or who controls Congress. Because what's clear, over the long haul, the market performs. And we saw it with both presidencies, both the Democrat and Republican presidencies, the market continues to press forward. And there's always going to be people out there who are going to say after somebody gets elected, if the market goes up or the market goes down, that they knew it, they saw it, they can predict it. The truth of the matter is you can't predict this stuff. And you don't know where the market's going to perform in the short term, but over the long term, the market goes up. And that being said, if the market goes down, you're going to think back to this video and say, no, he was wrong. And if the market goes up, you're going to say, yes, he was right. But remember, that is the short term. And I am not telling you whether or not you should be in the stock market, you should be invested or stay in any particular portfolio. I am not providing advice. I'm not providing any recommendations. This was only for educational purposes. That is my disclosure. And if you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.